And then, of course, if we shift over to the levered version, well, guess what? It's not 12.3, it's 16. So that's okay. That brings us back to the fact that the Fed is going to be forced to become more dovish, whether they like it or not, right? And that's why we had this absurd move up 5.4% on the day. That's wild. And that is the thesis. That is why the portfolio exists, at least in part. But certainly the timing of a lot of purchases, solar stocks, etc.
I don't want to answer your question about the recession.
NASDAQ 100 on TOST 0.8 of a percent is well detected.
Good morning, everyone. It's been a fun morning, that's for sure. So we're resurfacing, as the graphic shows there. We're coming out of the trenches. It's been a couple ugly days, certainly at end of last week and Monday of this week, and that pulled our portfolios down. So it's nice to see them recovering here. So I would attribute a lot of the weakness really to concern around the U.S. fiscal and funding situation. So U.S. Treasury bonds had a very poor auction, meaning they attempted to sell bonds to the public, institutions, governments, and it just went very poorly, indicating a lack of risk appetite for U.S. debt, not entirely surprisingly. This is a theme we'll be discussing in an upcoming episode, really. That was in part precipitated by Moody's downgrading the U.S. credit rating outlook to negative, which is a pretty meaningful statement for a credit rating agency to make. They aren't the only ones with this outlook, but each time it happens, it's definitely noteworthy, and the market tends to pay attention, certainly these days. So, flipping the page to yesterday, CPI, the Consumer Price Index, came in softer than expected, indicating that indeed inflation is slowing and nearing the Fed's target and maybe even a little bit below. It depends what year-over-year metrics you're looking at, really, right? There's definitely some that are indicating material softness at this point. And that goes back to our core thesis here, right? And part of the reason why the portfolio was started, I believe there was, a timing opportunity here, which you certainly see in the fixed income portfolio. With the Fed basically being forced to become more dovish, or just becoming more dovish themselves due to the incoming data, just like what we saw here yesterday. So, that spurred, I would say, an absurd rally. The Russell was up 5.4% or so. Other indexes were up a similar amount, and, maybe slightly less extreme, but they were up a lot. In short, the market has been on fire here, and it's due to our core thesis. Dovish pivot, we think, is coming. The new data likely even removes the previously telegraphed 25 basis point rate hike that was ahead. And furthermore, the rate curve is indicating that now we're likely to see rate cuts by the second half of 24. I'm pretty agnostic on that myself. I really don't know. And a lot can happen between now and then. So I'm a little bit cautious on when that happens. But what I do know and what I do feel is that we have this dovish pivot coming, which we're starting to see. I mean, our solar stocks were up just an incredible amount on that pivot, if you will. I think ENPH was up 16% yesterday. It's a $15 billion company, up 16%. So yeah, but I mean, if we start to see some real strain in the system, then it's conceivable we see rate cuts even earlier. And if things continue to hum along, I think the Fed could keep rates up. And, these are sort of normalized rates by historical standards. And I think they would like that because it would help guard against another significant wave of inflation, which will just get harder to combat. And as I've said to many people, the impact of having rates at these levels or even higher is determined not by the absolute level, but by the time they remain at these levels. Or put another way, if you think of it like a graph of rates rising over time, it's the time under the curve, right? It's sort of the volume of the rates over time that matter. So yeah, getting back to the portfolio, because I think that's why we're here. Let's dive into it. I've already done a couple trades today, which I'll detail at the end. But at a high level, we bought Gloabl-e after its earnings miss today. It's a guidance miss again, really, mostly. I mean, they did miss on revenue, but it's the same story as Confluent, really, right? The guide lower just devastates these stocks, and Gloabl-e was down 28% on that. Though, in fairness, it had a low of 19 last year. I was a buyer there personally, but that puts it up about 20% or something to its highs, and So even at today's price of 28, it's, it's still up over 50%. So the 28% is a nice discount. We'll take it, and it's allowed us to build a bigger position, which is also why we didn't have as big a position previously in the fund. Is much like Confluent and other things, as much as I do like those companies, they just weren't quite cheap enough in this environment for me to have sizable positions. The one thing that had a very cheap price was ENVX. So ENVX ended up being very overweight just due to its current price when the portfolio started. Whereas, if Confluent and Globe had been here or lower, they would have been higher weight. So we're just bringing those up in line with, where I would like them. And then Jumia, we bought a bit of Jumia as well. Jumia, not my favorite company in the world. For obvious reasons. It's cash flow negative, burning a lot of cash, potential bankruptcy concerns. We're putting this in the speculative or the Degen portfolio, and it's already in there, but we're just adding to it because I would say the outlook is better than before. Operations are improving, losses are decreasing. I just think it sort of helps to take bankruptcy risk off the table, and or dilution risk, I should say, as well. And I just think it's a potential multi-bagger going forward. But of course, it has high risk due to its business fundamentals, if you will. So yeah, let's get into it. Let's dive into the portfolios and just check out where they are. As I say, even an hour or two ago, they were up significantly more. But I actually prefer to show them right now because we can show a higher number next time, hopefully. So. All right, so here is the growth portfolio, November 15th. As you can see, it's 10 o'clock Pacific here. So we're still getting hammered on EOS. It's a serious issue for our returns, but hopefully that will sort itself out over time. ENVX, up just today, up 9.8, but 38% overall. And EOS down 23. The numbers are just ridiculous already, I would say. I mean, up 24% on end phase. We'll get to the end phase calls on the other portfolio. I think they're up 70% already. They're long dated, they're leaps. They're not like short-term gambling. They're long dated calls. 21% on SunPower. Tigo is still down a little bit, which is... Tigo's been a weird one. I think it's being... I don't know if it's unfairly treated, but it has operations in Israel, and I think that's the source of the weakness here. People are not quite as keen to touch stocks based in that region at the moment. Today it was up quite a bit earlier, and now it's down. So it's a hard one to figure out. But the other solar stocks have been on a tear. Tesla's been pretty good, actually. Started with a small position because I didn't really... It's not that so much that I didn't like the entry. I get sort of the plan out to 2030. I think it's good value here, or certainly where we bought. But we're not really buying with a 2030, 2035 focus here. we're buying with, we want to be able to talk about this in the next week and month and year. So I'm kind of hoping we get a lower price than even our original entry here. In the coming months, we'll see. Maybe not looking too likely at the moment, but I kind of like the Confluent Gloabl-e. We're looking for that, that some sort of guidance miss or something that really, really hammers the stock, and we get a good opportunity. But maybe not, and that's okay too. It's we don't have to chase. We've got lots of opportunities. So him and hers. Is on an absolute tear, up 34%, 35% from our entry. Schrodinger as well, 48% from our entry. Telia is actually doing okay now. It's up 6. It had some pretty rough days, along with a lot of the other biotech companies, which we bought a little bit of in the speculative, I believe. But we bought Caribou the other day, which is doing well. StoneCo had earnings recently, did really well on those, up 34%. Should own more of this. Glad we got rid of this, but by the same token, I'm sure it's doing well today. But we took a $700 loss on it in order to buy... Yeah, we bought Trade Desk. That's right, Trade Desk. The previous one, we sold other things. So Overstock up 15. Camping World up 26. 21% for Etsy. Which I believe, I'll have to refer to the future part of this video, I believe we sold Etsy in at least, it must have been this portfolio. Anyway, we'll get into it. Sold some Etsy to buy Gloabl-e. So GitLab, yeah, up 17, not bad. Confluent's coming back to the zero bound here, because remember we bought, I think it was like 28 or something we bought at. Does it show us here anywhere? 28, and then it dropped and we bought at 18. You guys remember that story. So same thing, same story with Gloabl-e here today. We're averaging down. I haven't done it in this portfolio yet, but we talked about it, and I'll show the trades later on here because they've already been done. HCP, HashiCorp, up a little bit, 39% for Datadog, 3 for Elastic. CrowdStrike's actually up 15. Small position there. You know, I love CrowdStrike, but again, I kind of want one of these, you know, for CrowdStrike. And Trade Desk is already up 24%, having bought it like 2 days ago, right, on the after hours. So, you know, things are flying here. Portfolio's up 12.3 right now. The growth portfolio, I should say. And then, of course, if we shift over to the levered version, well, guess what? It's not 12.3, it's 16. So that's okay. So, I mean, no need to run through. Numbers are basically the same. As you can see, the unlevered return, the 519 to 583 is the 12%. But as you will recall, we have actual capital of 400,000 with a borrowed amount of this, and a market value of this, that's 583. So, you know, what's our profit? Well, our profit is 64,000 at the moment, between this and this, I should say. And including this, it's the math, you know, the math is, well, here it is. This is our combined P&L column, which takes into account our unrealized gains and our realized gains, giving us a combined P&L, which is either then compared to our levered initial book value or our actual capital, to determine our gains here. Okay, and then on the medium risk portfolio, this one's actually been doing surprisingly well, keeping up with the growth, or at least it was this morning. How are we doing right now? 9.9, yeah, you know, keeping up, I would say. And the medium risk has 18% in treasuries, which, this is interesting. Is that today? I think they're up earlier. That's funny. Yeah, that it's our daily P&L, or daily change, I should say. Anyway, need to look into that, but still up 1,400. You know, treasuries are slow movers, 1.89% overall. So back at the top here, I mean, maybe I can tighten this up so we can just quickly look. Okay, so just running through this a bit quicker here. Palantir up 13% from where we entered. AI, or C3.ai, up 22%. You know, small weights. I wish I had bigger weights, but I wanted them cheaper, and we didn't get that, and they're heading up. So anyway, we have a position, small weights. Tesla up 13 in this portfolio, again because we started a day or two later, and you know, we had good timing on the growth portfolio basically. Mobileye up 13%, that's doing well, but again, a tiny position, just not really my favorite entry, so I was, you know, hoping to get a bit better price. Market was not happy when we were starting these portfolios. Overstock, yeah, up 9, Camping World 1, Etsy 21, Coupang down a little, C Limited down a fair bit. It's up 7% today, but you know, this is another one of those that you know, probably overreacted to earnings. I think it was down 30% yesterday or something. It was down a lot. I didn't do this, you know, jump in and buy a bunch while it's down. C is just, it's a bit of a complicated story, but it is cheap, you know, it's getting awfully cheap. But yeah, rebounding 7% today. So we're actually not down that much despite that big drop. Dollar General up 6, Disney up 15, Warby Parker down. That's something to consider adding to, actually. You know, I liked it 11% higher. It's a small position. So Jumia, didn't add in this portfolio because this is the medium risk. We have a little bit of it. We're happy with it. It's up 11%. All good. The oil stocks are actually up a little bit. And pipeline stocks, I should say. StoneCo up 30 in this portfolio. It's a good size weight because I like it. It's good value. I like Mercado Libre. I really do. But again, it's this like, do I wait or do I get it later? Sorry, I'm just looking at these prices. Oh, okay, yeah. The price of the stock is like 1,300 or something. These are changed today. Anyway, yeah. So up 7%. Tiny wait. Want more of it? Will wait at this point. Him and her is up 28. Schrodinger up 33. Same story for a lot of these. Viva Systems is down. You might want to take a look at that a little bit more. It's a small weight. I do like Viva. Accelera up 9. Recursion up 37. That's crazy. And Caribou up 25. EOS, there's our big whopper of a loss right there, down 28% still, but ENVX making up for it with like quite literally the exact same gain. That's kind of funny. ENPH up 21. ENPH calls. Is this updated? This might not be updated. 39. No, this is updated. Yeah, up 39%. That's right. They're 26.75 calls, so they're well in the money. Current ENPH price is about $95 or so. Solar Edge is up 30. SunPower is up 14. Tygo down a hair. STEM down a bit. Rocket Lab up 1. Well, that's not very exciting. Virgin Galactic up a whopping 41. Confluent up 6.8. That is true, yep. And this is down 20 overall after a 26% drop today. But we did add it to all portfolios this morning. So I've done some math on this one, which is not showing up here, but it's in, yeah, we'll talk about it. GitLab up 14, Hashi 5, 21 for Impinj, 35 for Datadog. It goes on and on. You get the gist here. Smart ran up 31. So, 18% weight to tech currently. Very little to space because space isn't a real category as far as I'm concerned. Solar is up, there's a 23% weight, which I think is higher than where we started. 11% for healthcare. Fintech, 3 point whatever. You can see the numbers. You don't need me to read these to you. But yeah, treasuries are up a little, and so overall up 9.9. That's not a bad return for a medium risk portfolio a month in, or not even a month in. I'm being facetious. I would like to do that every month. That would be all right. So don't get too comfortable with that. But that being said, I certainly expect that we'll be able to hold these gains going forward and hopefully build upon them. Low risk, yeah, it's up 3.4%, not bad as well, of course. We've got 14.5% cash. I'm not even including the interest on the cash, but we should probably do something with that at some point. Not in a huge hurry, but partly because the rate's okay, variable rate of 4.84. But yeah, up 3.4, so certainly okay for a low risk portfolio. And then the speculative Degen, of course. Let me just close up some of these. We want to be able to see what we're looking at here. Equity planned weight, we can get rid of that one for now. Let's just hide that column. Market cap, let's hide that. Okay, now we can see things properly here, sort of. Okay. So yeah, so this one we're levering up to 560 from our original 400K. These are some notes to do with our Gloabl-e purchase that I have not entered yet, but we've talked about. And so yeah, let's just run through. MicroStrategy up a little bit, which is the Bitcoin proxy. Gloabl-e down 22 overall, still down 26.9. Coupang down 6. And remember, this one started at sort of an inopportune time. The market had I think 3 good days, and so we jumped in with the speculative, which is fine. I'm not. But yeah, it is what it is. So just for context, why the numbers are a bit softer here. But yeah, Jumia up 3. I'm not actually going to read all these. You can look at them. You can see them yourself, or pause the screen here. But this one's interesting, up 71%. That's kind of ridiculous. So this is a 115 call for January of 2025. So it's, as I say, it's about $95 currently. We bought them for $12. So you know the upside here is pretty nice, right? If Enphase gets back to $200, let's say, you know, we have the option to buy 115s for $12. So yeah, the intrinsic value if it was 200 would be $85, right? Based on our or based on the strike price. We paid 12 for that, so we have like a $72 gain on top of our purchase price. So, you know, it's like 5 or 6 times your money if it gets to $200 instead of a double or a little more than a double. So, and this is that's our change. So, you know, that's going to be pretty interesting going forward. If, you know, if Enphase ever gets back up to 200, we're going to be laughing on this one. But what else do we have that's noteworthy here? Yeah, Tesla call is doing something similar, not as extreme. Yeah, and Caribou we added, as I said, so up 12% already. That's all right. And then 30% for Pubmatic, and Trade Desk looking good already as well. So yeah, overall, it's really truly just sort of breaching back above the surface here. It's had a bit of a rough go, in part because of good old EOS pulling things down, down 12 grand. But yeah, up 17 anyway. So yeah, so that's all right. Hopefully this one starts to gain some traction going forward here. Okay, so we'll jump into those trades just for sake of recording them properly. You can sort of see, I mean, Gloabl-e is down 26.9, and what did we sell? We sold Etsy, which is currently 73.19, but I will go through it properly using live prices, which I've already done, and I'll just tag that on here on the end. Okay guys, this video is getting a little bit long, so I'm actually going to do a separate short video showing the Gloabl-e trade where we sold Etsy to buy that and used cash in another case, or dipped into our leverage a little bit actually. Anyway, separate video. You know, we talked about it here, and you saw it down the percent that it was down even in this video. But I did do the official, you know, go on Yahoo, pick the live price, and formalize it. So. So yeah, we'll you know put that in as an official little record of the trades, but as a separate video. So yeah, all right. Don't forget to subscribe. It lets me know that you find this interesting, and if you do find this interesting, I'll keep making more. And if you don't, I probably will just do it myself. So, but yeah, no, definitely. If you don't mind, a like, subscribe, that sort of thing goes a long way. Yeah, we'll see you next time. Hope you enjoy.
Economy forward the next couple of years or so, adversely or positively?
Adversely, I'm a fear, but positively, potentially. Yeah, as a global macro investor for the last 50 years, my job has been to bet on what is going to happen globally macro. And what I learned in my lifetime is that many of the things that surprised me happened because they didn't happen in my lifetime, but they happened many times in history.